The world is changing, fast. Every day, new technologies emerge, transforming the way we live, work, and even think. Technology is evolving at an unprecedented rate, and with it, the way we think about money. Traditional banking systems are being challenged by innovative digital solutions. Cryptocurrency has emerged as a digital gold rush, captivating investors with its promise of high returns and financial freedom. It's not just a trend, it's a movement that's gaining momentum. But beyond the hype and headlines lies a revolutionary technology with the potential to reshape the global economy. Blockchain, the backbone of cryptocurrency, offers transparency, security, and decentralization. Are you ready to ride the wave of the future? Embracing this change means understanding the opportunities and challenges that come with it. The cryptocurrency market is a whirlwind of excitement and volatility. Prices can skyrocket or plummet within hours, making it a thrilling yet risky venture. Fortunes have been made and lost overnight, attracting both seasoned investors and curious beginners. The stories of overnight millionaires are as common as those of significant losses. But before you dive headfirst into this digital goldmine, it's crucial to understand the fundamentals. Knowledge is your best tool in navigating this complex landscape. What exactly is cryptocurrency, and how does it work? Understanding the technology behind it, like mining and blockchain, is essential. What are the risks and rewards? Evaluating these factors will help you make informed decisions. This essay will guide you through the fundamentals of cryptocurrency investing, empowering you to navigate this exciting new world with confidence and caution. By the end, you'll be better equipped to make smart, informed choices in the realm of digital currencies. Cryptocurrency, in its simplest form, is digital money. It exists only in the digital realm, secured by cryptography, which makes it nearly impossible to counterfeit or double spend. Unlike traditional currencies issued by governments, cryptocurrencies operate on decentralized networks called blockchains. This decentralization eliminates the need for intermediaries like banks, giving individuals more control over their finances. Imagine a digital ledger distributed across countless computers worldwide. This ledger records every transaction made with a particular cryptocurrency, ensuring transparency and immutability. This revolutionary technology, the blockchain, is the backbone of cryptocurrency. It's the engine that drives its security, transparency, and potential to disrupt traditional financial systems. The blockchain is more than just a fancy database. It's a groundbreaking technology that has the potential to transform various aspects of our lives. It's a paradigm shift in how we think about trust and security. Instead of relying on a central authority, blockchain offers a decentralized approach. In a traditional system, we rely on intermediaries like banks to verify transactions and prevent fraud. These intermediaries act as trusted third parties, ensuring the integrity of our financial activities. The blockchain, however, achieves this through a distributed consensus mechanism. This means that multiple participants in the network must agree on the validity of transactions, eliminating the need for a central authority. Each transaction, or block, is cryptographically linked to the previous block, forming a chain. This ensures that every transaction is secure and cannot be altered once it's been added to the chain. This chain is constantly verified and updated by a network of computers, making it virtually impossible to alter or tamper with. The decentralized nature of this process adds an extra layer of security. This decentralized, transparent, and secure nature of blockchain technology has far-reaching implications beyond cryptocurrency. It can be applied to various sectors, enhancing efficiency and trust. With the potential to revolutionize industries from supply chain management to voting systems, blockchain technology is paving the way for a more secure and transparent future. Imagine a world where every transaction is recorded and verified, reducing fraud and increasing accountability. Why should you care about cryptocurrency? This question is becoming increasingly relevant in today's digital age. The answer lies in its potential to democratize finance and empower individuals. Cryptocurrencies operate on decentralized networks, removing the need for intermediaries like banks. Cryptocurrencies offer a hedge against inflation, which erodes the value of traditional currencies over time. By holding assets in cryptocurrency, individuals can protect their wealth from the devaluation of fiat money. They also provide financial inclusion to the unbanked, those without access to traditional banking systems. In many developing countries, cryptocurrencies offer a viable alternative to traditional banking, enabling people to participate in the global economy. Cryptocurrency investments can potentially yield high returns, as seen in the meteoric rise of Bitcoin and other cryptocurrencies. Early adopters have seen substantial gains, making it an attractive investment option. However, it's crucial to remember that high rewards come with high risks. The market is still relatively new and can be unpredictable. The cryptocurrency market is highly volatile, and prices can fluctuate dramatically. This volatility can lead to significant financial losses if not managed properly. It's essential to approach cryptocurrency investing with a long-term perspective, understanding that it's a marathon, not a sprint. Patience and careful planning are key to navigating this complex financial landscape. Section 5. Stepping into the crypto market. Embarking on your cryptocurrency investment journey begins with education. Take the time to understand the basics of blockchain technology, different types of cryptocurrencies, and the risks involved. Knowledge is your most valuable asset in this rapidly evolving landscape. Once you have a firm grasp of the fundamentals, you can start exploring different cryptocurrency exchanges. These platforms allow you to buy, sell, and trade cryptocurrencies. Choosing a reputable exchange with high security measures is crucial. Look for exchanges with two-factor authentication, cold storage for funds, and a proven track record of security. Section 6. Choosing your crypto arsenal. The cryptocurrency market is vast and diverse, with thousands of cryptocurrencies vying for your attention. Don't get overwhelmed by the choices. Start by researching and understanding the top cryptocurrencies by market capitalization, such as Bitcoin and Ethereum. Bitcoin, the first and most well-known cryptocurrency, is often considered digital gold. Ethereum, on the other hand, is a platform for decentralized applications, powering a wide range of projects from decentralized finance, or DeFi, to non-fungible tokens, or NFTs. Diversifying your portfolio across different cryptocurrencies can help mitigate risk, just like in traditional investing. Section 7. Safeguarding your digital wealth. Security is paramount in the world of cryptocurrency. Unlike traditional financial systems, where you can rely on banks to recover lost funds, cryptocurrency transactions are irreversible. Once you send cryptocurrency, it's gone forever if you don't control the private keys. Think of your cryptocurrency wallet as your digital bank account. It stores your private keys, which are essential for accessing and managing your funds. Choose a secure wallet that aligns with your risk tolerance and investment strategy. Hardware wallets, which store your private keys offline, offer the highest level of security. Section 8. Navigating the crypto exchange. Once you've chosen a reputable exchange and set up your secure wallet, you can start buying cryptocurrency. Most exchanges offer a user-friendly interface that allows you to buy cryptocurrency using fiat currency, such as US dollars or euros. Before making your first purchase, set a budget and stick to it. Don't invest more than you can afford to lose. The cryptocurrency market is highly volatile, and prices can fluctuate dramatically. Start small and gradually increase your investment as you gain experience and confidence. Section 9. The art of crypto investment. Cryptocurrency investing is not a get-rich-quick scheme. It requires patience, discipline, and a long-term perspective. Don't get caught up in the hype or make impulsive decisions based on emotions. Develop a sound investment strategy based on your financial goals and risk tolerance. Consider factors such as market trends, project fundamentals, and your own research. Diversify your portfolio across different cryptocurrencies to spread risk. Remember, slow and steady wins the race in the world of cryptocurrency investing. Section 10. Avoiding crypto pitfalls. The cryptocurrency market is still in its infancy, and with any emerging technology, there are risks involved. Scammers and hackers are always on the lookout for unsuspecting victims. Be wary of phishing scams, fake websites, and promises of guaranteed returns. Don't let the fear of missing out or FOMO drive your investment decisions. Take your time, do your research, and only invest in projects you understand and believe in. Remember, if it sounds too good to be true, it probably is. Section 11. Embracing the future of finance. Cryptocurrency is more than just an investment opportunity. It represents a fundamental shift in how we think about money and finance. As blockchain technology continues to evolve and mature, we can expect to see even more innovative applications emerge. Cryptocurrency has the potential to create a more inclusive, transparent, and efficient financial system for everyone. By understanding the fundamentals, investing wisely, and staying informed, you can be a part of this exciting revolution. The future of finance is here, and it's decentralized.